Post-summer, there's quite often a feeling of back to school. And of course, it's all been exacerbated this year with the government trying to push us all back into the office for obvious reasons to try and get the economy back going. But what about the minerals sector? We're joined now by mining analyst and one of the founders at SP Angel, John Meyer, our regular guest here on IGTV. John, good to talk to you. We is indeed both of us still working from our respective homes, but are mindful of the fact that the government's trying to get the economies back on track. So far as your area is concerned, what's concerning you at the moment?
Well, there's a lot going on in the world right now, so there's many moving parts to keep track of. The great thing is that demand for commodities has recovered a lot. Prices for commodities have risen with that. We do have there has been some business interruption at a number of mines, particularly in Latin America. So we're still hearing reports of COVID-19 interruption, particularly in copper mines, sometimes in gold mines, but sporadically here, there and everywhere. But then the great news is we're seeing very positive news out of the US, China, even parts of Europe on the recovery in manufacturing and increases in output. But what worries us a little bit, particularly if we look back at home in the UK, is that manufacturers are getting everybody back to work, and that's fantastic. But they realise that they don't need quite as many staff as they had before. So yes, we see manufacturing profit margins probably recovering really well. I mean, having had a very tough first half. But the unemployment rate looks like it's going to carry on going up. Now, in the US, they took a lot of the pain early because they didn't go for our style of furlough scheme. So in the US, we're seeing people going back to work as manufacturers get everything going again. Clearly in China, it's a very different situation. I think the authorities tackle the coronavirus in the way that only a communist regime can. So they're very much back on track, although they do have problems because of the huge amount of flooding along the Yangtze River. And let's face it, the Yangtze River runs through most of China one way or another. So the Chinese are being forced to buy an awful lot of grain and foodstuffs from elsewhere, and in fact from the US. And in fact, if anything, I think this is a positive, because it means that they're going to have to largely fulfill one of the key obligations of the trade deal that they signed with the United States. I don't think it was ever their intention in China to fulfill their obligations for the trade deal, because they did stick in the pandemic clause, as we call it, and that pandemic clause gave them the perfect get out from that trade deal. But in fact, they're going to have to buy a lot of food anyway, and because America is such a big food producer and food exporter, they're going to have to buy that from the Americans, whether they like it or not. So it's an interesting situation. At the end of the day, I think when we sum it all up, we are likely to see increasing deficits in the metals. So there won't be enough metal to go around in the key metals, copper, nickel. I won't go into aluminium because it's less relevant to what we do. But in a lot of these metals, even ferrovanadium, I think we could possibly see a deficit situation developing by the year end. And that's good for the mining companies.
Yes, as you say, a lot of moving parts there. One of a couple of observations I got on your answer there. One of the points you mentioned about the rise in some of the base metals that we've had recently, and of course, all these are denominated in dollars. So when the dollar moves, there's obviously going to be an equal and opposite move, mostly in the price of the metals to the dollar. We've seen this big drawdown in the dollar recently over the summer, and as a result, we've seen these most recent highs in a lot of these metals because of a factor around the dollar. Are you suggesting that you are witnessing an increase in demand of these metals? You talk about a deficit that's likely to happen. Is that deficit because of increased demand and not enough supply, or is it because we still don't have sufficient amount of people back in the mines because of COVID-19 and we haven't had the mine investment to bring on new mines that's going to be causing the deficit situation, which will itself have an uplift in prices ultimately?
Well, it's a good point you bring up. It's because of the social distancing that just about everybody is practicing in the world these days. You can't have quite so many people working in such a close environment, and that is causing production rates to, shall we say, not be as quite as good as they might have been in many places, and of course you still got pockets of virus locally affecting certain mines. So I'm not going to say that demand overall is going to be any higher than it was last year. In many metals, it will be lower just because we have had a recession in the first half, and we may well see a double dip recession with a second fall in economic growth in the second half. But what we are seeing is that there's unlikely to be enough metal to go round. So the problems with the mines, and yes, you're right, the social distancing is causing some of that to be an ongoing issue, is not going to meet the demand. And if we look at other specific metals like copper, where there's an awful lot of, shall we say, electrification for electric vehicles and things like that going on, and it's being bought up as part of, because it's a key metal for stimulus spending. So construction that's being driven by stimulus tends to use a lot of steel and a lot of copper, not to mention a few other materials. So yes, we do expect those key metals to carry on performing well, and if we look at what's happening with prices of copper and steel and nickel, yes, these are strong performers, and yes, we can see the inventory levels within the LME and on Shanghai continuing to fall.
It's just actually interesting to look at some of these metals that are used in some of these new industries that we're all now so much focused on, battery metals particularly, of course. We've seen a rise recently in the share price of Tesla on expectations that this market-leading company is going to continue to break new ground. We just heard Tesla raising some $5 billion. Whatever it's going to use that money for, not too sure. But they're investing heavily, of course, in this new industry. How confident are you that the industry is able to continue this march forward, or have we really gone as far as we possibly can at the moment? We've spoken before about some of the batteries that are in cars at the moment. They don't go nearly far enough. They take too long to charge. How long is it before people are going to say, hang on a minute, we need some more progress in this area before we really start to buy into it seriously? We know that people do have to get bigger, thicker electric supply into their homes in order to give them the extra power needed, but it doesn't look like that's coming anytime soon. How confident are you about the immediate future, about this new era or area for the mining industry?
No, we are really confident in this. And okay, it's not happening tomorrow or next week, but it is happening within months and years, definitely. And it's coming at us really fast. So if we look at specific bits of information in the market, Tauga Resources in Australia, they have many more times the demand for graphite for lithium-ion batteries than they can actually supply at the moment. And in fact, more than their current plans are. If we look at Codown Minerals, yesterday they reported that Sinohydro, which is a large Chinese company and is associated with an even bigger Chinese parastatal company, has signed an MOU with Sinohydro to on a lithium project in Mali, and that's amazing news for these guys. And what it says to us is the Chinese government are still trying to grab whatever future lithium production they can from companies that are looking to develop this stuff, and even in slightly challenged and remote locations like Mali, which isn't exactly right next to the coast. But it makes no difference to these guys. Once the product's on a truck, it goes from the truck to the harbour. It's straight on a boat, and it's in China before you know it. So they are definitely looking forwards to a huge increase in lithium-ion battery production. We saw Elon Musk come out just a couple of weeks ago saying that he was challenging the industry to bring him lots of nickel and for that nickel to be, shall we say, environmentally and socially properly produced. We've got a very good idea. There's just not enough. There's not going to be enough nickel to go around, particularly for the new types of batteries that are going to go into cars. For longer range and faster charging and that sort of stuff. So when it comes to these battery materials, yes, there's a lot of evidence now coming at us saying, well, there's not going to be enough of the commodity to go around. It's going to be a game of musical chairs. Companies like Volkswagen and BMW, we know, are really quite concerned and are working hard to ensure that they have access to those raw material chains. Because at the end of the day, if you can't get the lithium, the cobalt, the nickel, the copper to go into these vehicles and into the battery manufacturing, then you aren't going to be able to produce the product that you want to produce.
Yeah, I think Elon Musk was quoted as saying that nickel is the new gold recently, which of course goes along with what you've just been saying. Just want to pick up on the China point just very briefly to round things off. Should we be worried that China is grabbing all it can in terms of some of these metals we've been talking about? That then means that if they have control over supply, they have basically everybody on their knees at their behest. Is that something we should be concerned about?
Oh, absolutely. And we've been concerned about this in the rare earths business for some time, because they really control such a large amount of the world's rare earth industry. I mean, must be certainly over 90%, if not 95%. And that's very worrying for companies that produce offshore wind turbines that use a lot of neodymium and praseodymium in the magnets for the motors there. And for the guys in the US defense industry, because they use a lot of rare earths in missiles and armaments and stuff like that. And not that we're into adding up what the armaments industry does, because really that's less of minor interest to us. But for the rest of the world, for the consumer world, so many motors use permanent magnets. There are hundreds of motors in the average car these days, all the door locks and all the little servos that work. They almost all rely on permanent magnets in there. Because you don't want to be having to electrify that motor in order to get it to work. You want it just to work, work anyway. So these things are increasingly important in the world that we live in, and the more we electrify, the more important we get. And I think clearly.
So what does the West need to do then to counteract this? Is it just a question of paying more for the minerals? Is China coming in with an amazing offer in terms of money for these companies to turn over the minerals they're producing to China? What does the West need to do to address this imbalance that seems to be building?
Well, the Chinese are much more proactive about putting a checkbook on the table and doing the work when it comes to helping these junior mining companies get into production. So Kodal Minerals is a really good example of it. Here's a company that no Western business was really taking much interest in, and yet the Chinese have a private Chinese enterprise which produces lithium in China, has helped to fund it going forwards. And now one of the Chinese parastatal companies has stepped in and said, well, we're going to have a serious look at whether we finance the entire thing, and they would presumably finance it all with Chinese money. Now, the West is not completely complacent. There are companies like Northvolt, which is building a factory in Sweden. It's just installed its first equipment for battery manufacture, and we understand that Northvolt is looking around at local businesses for the supply of graphite, for the graphite anodes, and it's not just any old kind of graphite. It's got to be good quality spherical graphite, and of course it's going to need copper, but the copper market is, shall we say, big enough to be reasonably sure we can get copper from. But when it comes to nickel, you want nickel hydroxide. You effectively want nickel in chemical form. You don't want to go to the expense of buying it in metal form and then turn it back into chemical form. So it would make more sense for these guys to have an alliance with a specific or several specific nickel producers, so that they can produce the right type of chemical at the right cost. And so what Elon Musk is saying when he says we want to do business with you guys is, he very much wants to get involved and secure his supply chain. And Northvolt will have to do the same. I don't know where they're going to get their nickel from, but they'll have to look around at all sorts of smaller companies as well. And it's particularly important to try and buy the right sort of nickel production.
Mm. Okay, look, John, we'll leave it there, but thanks for joining us and updating us on how we should be viewing the markets in this last 4 months of the year, as we had that, as I say, push by the governments to get us all back to work. And there's a new feeling in the markets at the moment, but let's hope that things can start to steady themselves. That's John Meyer, mining analyst at SP Angel.